I mean, Berkshire's, is his words, it's a financial fortress. I mean, it's Fort Knox on steroids.
What we have here is a log chart of Bitcoin since 2013. And as Carter Worth will say, the lines draw themselves.
I mean, right now you have this choice, and Bitcoin's not as easy to move around, but eventually it will be. And then you'll have a choice and you'll say, hey, do I want to pay the banks 2.5% to 4% every time I swipe my credit card? Or do I want a currency that's frictionless?
Do you trim a little bit, take some of your profits? Because what is it? You never go broke by taking profit. Apparently my comment, Tim Seymour, left Guy speechless.
Black people need their own CNBC.
Primarily, the news is focused on the US stock market, but there are times when they cover international markets as well. And there's a ticker at the bottom that will give you business updates on what's happening around the world. But the most important point that I want to bring up is the way that the news is covered on one of the most popular networks for covering this content. Like most news networks, you can't help but to notice the bias that they have in reporting on certain topics. And you can't help but notice that they have a certain audience in mind. Who exactly is that audience? From watching very closely over the past 6 months, it is definitely not Black people. Not to say that CNBC is going out of their way to exclude Black people from this conversation, but the way that the news is covered clearly shows that they take for granted everyone is coming into this conversation with the same level of vocabulary, experience, and resources to put their content into practical use right away. Let's stick with the stock market specifically. To most people, it was no surprise that March 2020 was the perfect opportunity to buy some stocks at a bargain price. And if you're like me, you saw your returns hit unprecedented high levels. Think Tesla. But some of you might just have heard me say this and were asking, what exactly is she talking about? Which leads me to my point. 2 months ago, Quartz magazine reported that the richest 10% of families in America alone own 83% of shares in the stock market. And it's safe to say a microscopic percentage of those families are Black. I have a master's degree in business and I went to an Ivy League school, and still I'm looking up most of the vocabulary words that I hear on CNBC and Investopedia.com to figure out exactly what they're talking about. So what good is it for the average person to watch CNBC if A, they're unfamiliar with stock market terminology, B, they may not have a legacy of watching others in their family or around them actually invest in the stock market at all, and C, if they don't have the money to make a huge return on whatever investment they make based off of the advice given on CNBC. To that point, I've started to hear some CNBC commentators talk about fractional shares. Fractional shares, or also known as stock slices, are being pitched as beneficial to both Americans and also people who live outside of the US but want to get involved in the US stock market. So my audience in Africa, this is still for you. Stay tuned. When you buy stock slices, you are literally buying a slice of a stock, or a fraction of it, whichever visual works better for you. You would do this if the stock price for a full share of a company was way too expensive for you to buy outright. Think, for example, Amazon being $3,000 for one share. So what you would do is buy a fraction of what you could afford, maybe 1/10 or maybe 1/100th. Buying stock slices doesn't mean that you own more of the stock for less. It means that you own less of the share for less amount of money. There should be a red flag waving around your face right now. But if it's not, let me make it a little bit more clear. Remember when I said that CNBC is talking in a way that assumes that everyone in their audience is coming to the table with the same amount of resources and the same amount of education to make the best decision? Well, if you're someone buying stock slices, it's safe to say that you are not making the same moves as someone else watching the same commentary, and you're definitely not going to see the same results as them when playing in the market. I couldn't find any exact data on the return on investment for investing in stock slices, but from my experience using them for Amazon, I can tell you it ain't that great. I made 17 times more owning a full share of Google stock than I did owning just a fraction of Amazon, and in a shorter period of time. All the research I was able to find and dig up said the same thing. Stock slices are only potentially better for you in the long term. That means that you're hoping that by the time you're 65 and retired, that those little slices add up to a bigger pie that you can add to the money that you'll need to depend on when you're not earning anymore from going to work day to day. But then Michael Fink, a professor at the American College for Financial Services, had this to say about relying on stock slices for your retirement fund. Probably worst of all, when you're buying stock slices, you don't even own any part of the company. You own a fraction of what the brokerage firm owns in that company, and you're buying a fraction from them. Now, we've been preaching black ownership, right? Sounds like that defeats the purpose. I'm being a little bit sarcastic to basically say black people need their own CNBC, a channel that meets them where they're at financially and gives them sound advice on building wealth that they can actually act on immediately. So let's say you're watching this video right now and you're someone who makes less than $50,000 a year, works 2 or 3 jobs to make that amount, has more than 2 children, and barely has $1,000 in saving to get started. What would you do? If you come back next week, I'll have more details on some ideas that I have in mind. But if you want some immediate advice, you should follow my blog post and you should follow my Instagram account so you can get the advice a lot quicker, because it takes a lot to edit YouTube videos. But here's where I think any black equivalent to CNBC should start in order to give some advice to the black community. Don't equate in your mind that a high stock price immediately equals to a more valuable stock or company. Just because a stock is selling at, let's say, $400 doesn't mean that it's a better investment than another stock that is trading at $100 or $50. That's a good thing to keep in mind, because it may mean that it's not necessary to go into stock slices because the more valuable investment is actually already affordable to you. Also, here are some keywords that you should add to your investment vocabulary ASAP. Market capitalization and operating income. Finally, there are more concrete ways to earn the income that you would need to invest in the stock market in a way that will actually give you more of a return on your investment. Focus on a more concrete money-making plan so that when it's time for you to go into the stock market, you're guaranteed to make a lot more money. If you want more advice on that, make sure you hit the like button on this video, then hit the subscribe and alert button on this channel so that you can get an update anytime a new video is uploaded that you can watch for free and start to get real about your journey for financial stability.